Maneco 64, home of alternative economics and contrarian views. This interview was conducted on Monday, July 20th, 2020. I have the pleasure of speaking with Alan Meyers today. I've been on some live streams with him on Rethinking the Dollar, and his views are very interesting, and he's written a pamphlet called Fed Ed about the Federal Reserve and what we can do to get rid of the Federal Reserve. Alan, would you like to tell us a little bit about yourself, and so we can dig into Fed Ed?
Certainly. Thank you so much for having me on your program. I really appreciate the opportunity. I'm a CPA, certified public accountant. In other parts of the world, they're called charter accountants. I am a forensic accountant by trade, and that means when you need to find out where the money came from, where did it go, you need someone to dig and hunt. That's me. That may involve legal activity, it's involved testimony and trials, but not everybody is suited to this work because not everybody wants to go looking for something they don't know what they're looking for. And that often is the case, but once you find it, you know this was it. So that's my professional background. My interest in the monetary system started about 10 years ago. Quite by accident. You may know the book, The Creature from Jekyll Island by G. Edward Griffin, who's become a friend of mine. It's a 600-page monster. I started reading it. I have no idea where, but somewhere in the pages of that book, I woke up. Before then, I was totally asleep. I didn't know what was going on. I didn't think about the world, really. I wasn't political, and I had no thoughts about the monetary system. Fast forward to today. We've been on Rethinking the Dollar or Wise Talk. I'm on a radio program here, I'm based in California. There's a radio program my friends had for many, many years. I've been on it for 2 years. It's called Constitution Radio. You can find it on the web at KMET 1490 AM. I also have my own. I was offered this, so I took it. It's a 2-hour time slot on a YouTube live stream channel called Patriots Soapbox. I call the program, it's a 2-hour program on Sundays, For the Republic. It's very important for me that people understand about the U.S. We were designed and we were meant to be, and we must remain a republic, not a democracy. Democracy is mob rule. You will find nowhere in the U.S. Constitution or the Declaration of Independence that word. The founders knew about it, that there's no way. Fast forward to today. I try to be a basic monetary system educator. And I say basics because you don't need to understand how this system really works. You do not need a PhD. You don't need Wall Street experience. You need to just understand some very simple things, and that's what I put in Fed Ed. I take the reader basically step by step, and I know we're going to go through the first so many. It's easy, it's simple, it's non-technical, but I can tell you by dealing with other CPAs, other accounting professionals, this is nowhere in our education. Not college, not post. It's like we don't talk about this. Economics and accounting are two separate disciplines. And frankly, for me, economics is really, it's all theory. It's not fact. And it's the study of how humans interact with each other in commerce. That's completely different than how the monetary system works. But they're in control of it. Therein lies the problem. Yeah,
they don't, the universities, the schools, they're all funded by the people who control the central banks. It's the same thing here in the UK and I think everywhere else. And the other thing you noted about democracy, yeah, there's that old comment or saying by Benjamin Franklin when he came out of the Constitutional Convention and two ladies asked him, what have we got, Mr. Franklin?
What have you given us?
Yeah.
And the woman that asked that question, her name is Elizabeth Barrow. She has an interesting history. And Dr. Franklin's response was, sorry, I hope you don't mind, I cut you off. The response was, a republic, madam, if you can keep it. Now, there's two things that to me are really important there. One, Benjamin Franklin said republic. Two, he said, madam, if you can keep it. At that point in time of history, think of how empowering that statement is. He didn't say if your husband, your father, your brother, your sons, your uncles, if you can keep it. Now, he knew who he was speaking to. Elizabeth Barrow and her husband were known in the community. I think they had a hotel, dining area, and so a lot of these people would hang out there. And Elizabeth would be part of the conversations. So she knew what she was asking, and Franklin knew who he was talking to. But it's an amazing statement at that time.
Yeah, and I guess at that time there's still thoughts of kings and monarchs, and so it was. And I guess the Electoral College, the whole system, you can see, was designed to take away the power of the mob rule. As you said, even senators, they were elected by the state. That changed, I think, early 1900s. That's something else.
That was the 17th Amendment. Okay, to judge the Constitution in a way, it doesn't solve all the problems that we perceive today. It's taking it completely out of context. You've got to go back to 1789, 1787. Think about what the world was at that time. The world was ruled by monarchs, dictators, and tyrants. This was the first time people came together and said, basically, bite me, we're going to do it ourselves. They also knew that they had to divide up the power. I tell you, I would love to be part of a program that basically put on what happened at the Constitutional Convention. This was 4.5 months of yelling and screaming. And ultimately, the Constitution is the great compromise. There was give and take on all the sides. Anyway, you have this fight for what's going on. They come up with Congress, what we call Congress, has two houses. You have the House of Representatives. These members are elected by the people, and we can get into that. And then you have the Senate. Keep in mind that it was 13 independent, separate, sovereign, strong-willed states. It's their representatives that created the federal government. The federal government didn't create the states. So they were very sensitive to losing power. They had already fought a very long Revolutionary War against England and King George III. They were not in the mood for creating another all-powerful central government. So the states would send the senators, and each state had an equal voice. They could send 2 senators. The House was dependent on population. One of the reasons for the Electoral College is they realized, okay, you got a bunch of people in this state. You have almost nobody, in Rhode Island, let's say. Okay, if we don't figure out how to balance this out, a couple of population centers, like New York, Philadelphia, Boston, they could rule it all. Well, then now we're back to democracy and we're back to mob rule. That's why they have the Electoral College.
Yeah,
that's my understanding. But anyway, it was something that had never been done before, where people would decide for themselves, and they would decide to be ruled by the rule of law, not mob rule. And in a way, that system has been under attack since the day it came into existence.
Yeah, that's right. And let's jump into the Fed, and I'm gonna just tell you about an article I read on the 4th of July or 5th. I think it was a guy called Gary North. He writes a lot for the Austrian school. He's online, and he was noting that prior to the Revolutionary War, actually the colonies didn't pay much tax to the mother country. It was like 1% of GDP, I think. And so he was saying, did we really get independence? Do you think how much is the Fed responsible for that? So we can jump into Fed Ed.
Okay. I'll address what you just said, and then we'll start going through the modules. In the U.S., we have what's called the Federal Reserve System, the Federal Reserve Banks. The nickname for that whole thing is the Fed. So when I refer to Fed, I'm not talking about the federal government. I'm just talking about our monetary system. The thing about the Fed is that it's kind of, for me, based on my education, what I've studied, it's the front. People talk about the Fed. They talk about the Board of Governors. They talk about, Fed this, Fed that, setting the interest rate, everything.
Or the chairman.
Always the chairman, whoever that is, and what comes out of the Board of Governors. The problem is, that's not where the power is. The power is held by one group, the banks. People, and this is what happens when people, when people, what I would say, misuse terms. The common term is money. Well, in my world, money has a very specific definition. I didn't make this up. I got this from the U.S. Treasury and the Fed system. They tell me what money is. And I've learned, and we'll get to it. So this is a little spoiler alert. The Fed in its own name has no money. The Fed in its own name has no reserves. We'll get to why that is. The only entity that creates money in again, I'm talking about the U.S. system, but it's very similar in the UK or England. By the way, do you prefer UK, England, Great Britain? I never know what to say.
I think UK is better. Yeah.
Okay.
That's what's used here. People don't use Great Britain so much anymore. I think it's only during the Olympics that the UK competes as Great Britain.
Okay.
But, yeah.
So it's UK versus instead of England. Okay, yeah. Good. See, I like to know these things. The sole creator of money in our system are banks. They're the only ones that create and extinguish. Yes, money comes into existence, money goes out of existence. It all happens at the bank level. This is where the power is. This is what we'll get to today. But so for people to talk about the Fed as if this is the source of power, that they're really in control, I don't agree. And I can explain why. But let's begin with Fed Ed, Module 1. Module 1 is titled Origin and Development of Money. Now,
sorry, can you go over the cover first?
Yeah, if you put it up, I'll talk about it.
Sorry.
Perfect.
Okay.
No, you're fine. Let me get this out of the way. Now, what you have here, I will take credit for the design. I can't draw two stick figures having a stick fight, but I can design. And this is my design. What you have is the banker. Now you'll notice on the banker, there is a badge, BOG, that stands for Board of Governors. He is walking at the corner of Main Street and Wall Street. He's using the American flag and its pole as a walking stick. disrespectful. He has stabbed the Declaration of Independence, and he's walking on the Constitution. This gives you an idea of what I think of the monetary system.
Yeah.
You're at the corner of Main and Wall Street, and you can see that there's a cliff. Now, the artist and I, we use the term financial cliff prior to the term fiscal cliff being in our news. Now you have debtor's prison, and the address on the door is 1913. That 1913 stands for the Federal Reserve Act of 1913. There's a lock on it. If you notice at the waist of the banker, you have the keys. Sticking his head through the bars is Uncle Sam. Then you have that creature. Now, it's actually meant to be a Hydra. Hydra is a mythological creature, multiple heads, multiple necks. The mythology says that if you cut off one head, two will grow back. And of course, the head of the board of governors, the banker, is saying, I'm here to help. Notice that debtor's prison is about to fall off the financial cliff. And notice who is on top of debtor's prison, the Hydra. There's 12 heads there. Each head represents one of the 12 Fed banks. The idea for the Hydra is that if you take off one head, a problem, and each head is a significant problem, two will grow back. There's only one way to defeat the Hydra. You have to take the thing it only has one of, its heart. And in this case, it's the control, ownership of the monetary system of a country. Until you do that, they can say they're here to help all they want. But what they've done is they've put, in this case, Uncle Sam, our federal government, into inescapable debtor's prison. And I'll just jump ahead a little bit. I looked it up before we went on air. U.S. government, federal government debt is now listed at $26.4 trillion. That's just the debt. That's not the unfunded liabilities. That's not all the debts of the states, the counties, the cities, the people, the businesses, just the federal government. This debt is absolutely, totally unpayable, and if the interest rate spiked up at all, it would be unserviceable. The problem with the word trillion is it's become very commonplace, but people don't have a way of understanding its magnitude. And I'm going to get to that. But so that's my description of the artwork. Any other questions or thoughts on that?
No, it's clear.
Okay.
And I guess we go over the
right there.
Here
yeah.
it is. There's
I call it key to the cover, where I
Yeah.
actually describe what I said.
Yeah.
And if you scroll back up, you'll see that the artwork is titled "The Master of Our Debt."
Yeah. And I guess one thing I would say as well, the Uncle Sam there, the U.S. government or Treasury, ultimately that's the taxpayer funding that as well, isn't it?
Well, allegedly, the people would be funding our government. However, if that was sufficient, there would be no debt. Obviously, that is not sufficient. Taxation has not been sufficient, and the government has been allowed to borrow. For me, a government, I don't care if it's city, state, regional, national, provincial, governments are not in the business of making a profit. Therefore, they have no for-profit making operation from which to repay debt, which means if they're allowed to borrow, it's a Ponzi scheme. You know the name Bernie Madoff?
Yeah.
Uncle Bernie is doing 150 years in federal custody for running the world's largest private Ponzi at $60 billion. That's nothing compared to 26 trillion. Just to put trillion into context, If it was written, you would know that it's 1 followed by 12 zeros. That doesn't do anything for me other than get my hand tired if I wrote it. Next, there is, someone will say, it's 1,000 billion. Okay, it's 1,000 billion. Still doesn't do anything for me. I put a trillion into what I call 3 understandable units. Now, these are American units, not metric, but so forgive me. A second. We all know what a second is. Snap of a finger. If you were to live 1 trillion seconds, you would live to be 31,709 years old. Now, is that going to happen?
No.
I didn't think so. That's 1 trillion. That gives you the magnitude of it. And our treasury debt's 26 trillion. Next, an inch. Might be a couple centimeters, whatever. An inch, very small distance. If you were to walk 1 trillion inches, you would walk a distance equal to 633 times around the Earth at the equator. 1 lap, 24,500 miles. Is that going to happen? No. That's 1 trillion. Finally, miles. And as we know, 10K equals basically 6 miles.
Yeah, don't worry. Here in the UK, we still use a lot inches and miles, even though.
Okay. Well, if you were to fly, let's say you wanted to be the first one to get that trillion-mile frequent flyer card, right? You would have to fly a distance equal to 107 round trips, 107 out and backs, Earth to Pluto and back. That's 1 trillion. 26 is absolutely, it's beyond astronomical.
Yeah, so that is a Ponzi scheme because it will never be able to be paid back. So they have to keep increasing it to keep servicing the debt.
Well, to the point, but like any good Ponzi, and they're all the same, they have one fatal flaw. They eventually run out of lenders. And any government is basically running, especially at the national level, they're all running Ponzi's because they cannot repay the debt from profit because they have no for-profit business. And taxation for me is not profit making, it's profit taking. And if taxation was enough, they wouldn't be borrowing anyway. We have to change the monetary system to get the national government out of the business of borrowing.
All right. So can you, sorry.
No, go ahead. Go ahead.
Could you tell the viewers before we start going over your modules where they can find it?
Right now, you can find modules 1 through 5 on the website FedEd, FEDED.us. 1 through 5 is there. We are working on getting this whole thing in an electronic ebook for a very small amount. If you want to actually read the modules, all of them, you can get 1 through 15 by going to an online publication called Citizens Journal, which is here in Southern California. They published 1 through 15. So I'm happy to share it with anybody. And I would say if anybody has any questions, comments, whatever, contact this broadcast and I'll be contacted and be happy to have the conversation because we all have skin in this game.
Oh yeah, people need to learn about the monetary system because money or currency is something that's used in all. It's half of all commercial transactions in the world. You need, unless you're going to barter, of course. But so it's really important. It could be a matter of survival for we're such a specialized economy nowadays that if money, the monetary system collapses, is going to be very serious.
You hit on a lot of great points with that, which I will amplify on. The For me, the monetary system in a country is the most important system a country has, because everyone and everything is connected to, through, by, and with it. And our monetary systems, by the sheer fact of three things, we have absolute reason to know this is working against us every day. The way I phrase it is, the system lies to us, cheats on us, and steals from us every day. And how do I know this? There's three things that we know exist. They're in the excuse me, they're in the news, and they're accepted as normal. Nothing new here. Walk on. That's inflation, federal income taxation, and national debt. In a proper monetary system, you have neither. You have none of these. So let's begin with Module 1, called Origin and Development of Money. Now, every module opens with a quote that I found, and I find they are applicable to the topic. So I'll read the quote and then we'll go on. Money, is the most important subject intellectual persons can investigate and reflect upon. It is so important that our present civilization may collapse unless it is widely understood and its defects remedied very soon. Robert H. Hemphill, Credit Manager, Federal Reserve Bank of Atlanta, 1936. Well, I like the fact that he said it's the most important subject. I really like that. Obviously, this happened 80-some years ago, and our system has not collapsed, but it's gone through a lot, and it's on the verge of collapse. And he talks of having it widely understood and its defects remedied. So this quote really works with me. The thing is, what is money? You can define it by what it is and what it does. Most people define money by what it is. You've got the people who want gold and silver, whatever, cryptos. Well, to me, what's important about money is what it does, because it has a function, a singular function. It facilitates, it makes happen an indirect, non-barter transaction. If we go way back in time, of course, everything was straight up barter. And people figured out, this takes a lot of time. This is inconvenient. I'm not very successful. Over time, people in different places at different times created what I will call money, something that facilitates, makes happen an indirect, non-barter transaction. They did this because their trading was much more successful, much more predictable, and they could trade over wider and wider areas. And we'll get into some of the different forms of money that have been used throughout time. The thing is that this is what's important. Did banks create money? No. Did governments create money? No. People did. The concept, in essence, the patent, belongs to the people, not to banks or governments. We have been robbed of this, and this is not okay. So the takeaway is that people created money, and it allowed them to peacefully and successfully complete indirect transactions for goods and services. And now to the point that you made earlier, when you don't have to make everything that you're going to consume or your family's going to consume, you can specialize. And when you specialize, you get better and better. And your product or your service may become more and more valuable. We've been able to specialize because people created money, not banks, not governments. This belongs to us. We need to take it back from the people, from the institutions that took it from us. Any thoughts?
Yeah, they've hijacked it, basically. The politicians with the bankers together, and I guess that's what the Fed is all about.
Yeah, and
They did the same thing here in the UK, and I think it started even before the Bank of England. I think it was in 1666. There was a currency act that allowed the East India Company actually to export silver, which was supposed to be the coinage, a big part of the coinage. So yeah, here it started, and the Bank of England was founded in 1694. So yeah, it's been about 354 years that they've hijacked it.
Right, and I'll get to one more aspect. So let's talk about characteristics of money. If you'll scroll to module 2,
yeah.
Please. Thank you. Okay, here on the screen there's 12 characteristics that most of them I found in my writings, my readings, and some I've added to. The first few are absolutely obvious. If it's not transportable, chances are it's not going to be a good form of money. If it's not dividable, or the more dividable it is, the more little pieces you can put it into, the better. For example, I did a speech once talking about this topic, and the question was, which was the better form of money? An egg, a tomato, or an orange? Well, the orange won. It's naturally dividable. Yeah. It's easy to transport. Non-perishable. If it goes bad on the way to market, you can't use it. Wanted and scarce. If nobody wants it, it doesn't matter. If it's scarce in supply, that may increase its value and may increase it being wanted. Now we get to one that I added, interchangeable. For example, if you owe me £1, I don't care what pound note you pull out of your wallet. Just give me one. That's interchangeable. Unit of account. Unit account, store of value. These are often talked about as being extremely important, and unit of account just means that whatever's being bought or sold is, what's the word for it, is denominated in what you're trying to use. Dollars, cents, pounds, whatever. Store of value. This is key. And this is why inflation is so extremely bad. Store of value is, if I have if I've got $1 and today I can buy 3 apples for $1. If my money has a store of value and it holds value, next week, next month, next year, I can get the same thing for the same amount. That's store of value. When your monetary system gives you nothing but inflation, which is actually loss of purchasing power, well, I got the 3 apples today. Next week, next month, I'm only going to get 2. Well, when your monetary system, by its very design, takes away store of value, purchasing power, through its inflation, the unit has failed.
Yeah, and the central banks even talk about how it's good to have inflation. They even have a target of 2%. It's crazy. I think the reason they do that is because the Ponzi can't keep going without the inflation, the increase in the money.
There is this, for me and my study, there is a specific reason why inflation is absolutely part of our monetary system. But to your point, yeah, the Fed has an inflation target of 2%, which means if we do it really well, the purchasing power of your money will go away by 2%. This is considered a success?
It's crazy.
That would be like me coming to your house and saying, I'm going to sell you the best irrigation system ever. You're going to love it. It's fantastic. You can talk to it and it will run. It's great. and I'm going to sell it to you for a relatively nice price. And after I install it, I tell you, oh, one thing. Sorry, I forgot to tell you. Every year, you're going to lose 2% of your property. Enjoy. Okay?
Or you're going to get 2% less water as well.
No, you'll get the same water. You're just going to lose your property. So in 50 years, you got no property. But it was a great irrigation system. Legal tender status. This gets a lot of talk. And on our
about not consumed. Do you want to talk a little bit?
Oh yeah, not consumed. Okay, if you and I are trading apples for oranges, there's going to be a good chance that one of us is going to eat one of our forms of money somewhere along the road. But you can be money without being consumable. That was the point of that. Legal tender status. Our currency, the Federal Reserve note, says that it's good for all debts, public and private. However, and I'm going to get to this later, there is no U.S. federal statute that says you actually have to take the money. So the term legal tender is not properly understood. Has a physical counterpart. This is where I have a problem with cryptos. There's no physical counterpart. It's all electronic. And for someone to access cryptos, this is my understanding, you need to have computer access, internet access, electricity with you and whoever you're dealing business with. If one of those goes away, you're toast. Plus, and I didn't put it in here, plus my understanding is for Bitcoin, you need to have a 60 alphanumeric character password. Now, this is not something you're going to memorize, which means if you lose it, forget it, can't find it, you're toast. And I believe a year or so ago, there was a person in Canada who was running an exchange. He died with the password in his head, and no one could find it. So it all went away. Ease of use. Given what you have to go through to use cryptos, I don't find it easy to use. I find it easy to pull money out of my wallet. So these, to me, are the historical characteristics of money. But ultimately, the only thing we care about, or the most important thing, is its function, its ultimate use and benefit. It facilitates, it makes happen an indirect transaction, and we have been allowed to become specialists. Any thoughts or questions?
No.
Okay.
It's all clear. Should we go on to 3?
Let's go to 3. Absolutely. So now we're in what I call examples of money from the past. This gives us an idea of what humans chose to use to facilitate indirect transactions over time, over the thousands and thousands of years. So the ordinary types, and I divided them up between animals. It could be the animal, it could be a pelt, it could be the fur.
Do you want to go over Thomas Jefferson's quote?
Oh, thank you. I'm sorry, I forgot that. Thank you for bringing that. One of my favorite founders for many reasons. It's incumbent on every generation to pay its own debts as it goes. A principle which, if acted on, would save 1/2 the wars of the world. Thomas Jefferson. Think about that. Pay its debts as it goes.
Not happening today, is it?
What country today, what country 100 years ago can meet that statement?
Not many.
I don't know of any, especially the big ones. So we have animals, we have consumables. This is something that you would actually eat. Cacao beans, corn, spices, tobacco, whiskey. Oh yeah, whiskey. That's a good one.
Yeah.
I called these couture, as in fashion. You've got beads, blankets, clamshells, gemstones, silk, metals, of course, gold and silver, bronze, copper, and iron.
Yeah.
In their bulk form were used as money. Then if you go down, you see all the unusual ones. But the one I want to focus in on is if you go back to the time of the Incas. Now, the Incas had one heck of a civilization. Absolutely. And their buildings, think about this, their buildings are still there. And you cannot put a piece of paper between the seams of the big stones. Okay, this is amazing. And I mean, to this day, those buildings are literally in the middle of nowhere. So they had a heck of a civilization. They had literally tons of gold and silver. But they didn't use gold and silver for money. They used cacao beans, which means to the Incas, which had a great civilization going until they ran into two things, Spanish guns and Spanish diseases. The Incas, their money literally grew on trees. And it worked. What matters is what people consider money, not necessarily what it is. That's the upshot on 3, so we can go to 4 if you like. Unless you've got questions, of course.
No, that's fine.
Okay.
Okay.
Now we get into the technical. What is M1 money today in the USA? And it ain't no WW2 rifle. Because their M1 was a name assigned to a rifle and a tank.
Okay, during World War II, I guess.
Right.
Yeah.
The process by which banks create money is so simple that the mind is repelled. John K. Galbraith, 1975, from his book, Money, Whence It Came, Where It Went. I can tell you that the process by which banks create money is so simple, my mind is not repelled. It is stunned. It is amazed. It is intrigued. But if I was repelled, I would never have done all of this work. So what is M1? M stands for money supply. 1 stands for the number 1 supply. In our system, there's an M1, M2, M3. But we're going to deal with M1. If you listen to economists, they're always talking about M2, the much bigger supply. The problem is the vast majority of money is actually created as M1. So to not discuss, to not recognize the power that exists in M1 totally misdirects the conversation. So what's in M1? M1 is comprised of 4 items: cash in circulation, coin in circulation, electronic digits in checking or demand deposit accounts, and traveler's checks issued by non-banks. Well, the traveler's checks issued by non-banks is so de minimis, let's just put it aside and let's just deal with the big 3.
Yeah, I
Cash,
remember
coin.
back in the 70s and 80s, my dad, when we used to travel abroad, we had American Express traveler's checks, but they were as good as you
They
went
were
to
money.
a hotel and accepted it.
They were considered part of the M1 supply. I don't even know if they're out there anymore. I remember when I traveled to Europe, I left home with American Express traveler's checks, and I promptly lost a bunch of them in Switzerland. Fortunately, I was able to recover some of them, but anyway, when I say cash and coin in circulation, this is very specific. Your pocket, my pocket. Your business, my business. Now, the definition is unclear if it would include, let's say, local or state governments, but for the moment, let's say it does. That's cash and coin in circulation. Now, you know, and I know, if you go to your, if I go to my bank and I could get into the vault or the teller drawers, there's going to be a lot of cash and coin. Thing is, When cash and coin is held by a bank, it's not considered in circulation, which means it's not money, M1 money. When the federal government, the US federal government holds cash and coin, it's not considered money. It's not in circulation. Same with the Fed. To make it simple, people have money, or businesses have money. Banks have no money in their own name. The federal government has no money in its own name. And the Fed itself has no money in its own name. Okay, if I go to the bank and I go, the counter, and I ask to withdraw some money from my account, and they hand me a few 20s. Well, in my hand, this is before I was educated. In my hand, it's money. It's cash. Why would I ever think it wasn't money in their hands? It would never occur to me. And that one of the reasons was because it was never talked about. So the terms I use, as you can see at the bottom, I use M1ED for electronic digits, M1CA for cash, M1CO for coin, and M1TC for traveler's checks. This is money. And we have it. Let's go back again. Let's take a trip back a bit. Who created money?
People did.
People did.
Yeah.
Who currently holds money? People. Not banks, not governments, not the central bank. Why are the people not in control of the very system they use? Well, in the US, it's because in 1913, we had possibly the worst congressional year ever. We got the 16th Amendment, the 17th Amendment, and the Federal Reserve Act of 1913. I don't think any year can compete with that. 16th was the taxation. 17th was allowing federal senators to be elected by the people, not appointed by the states. And of course, the Federal Reserve Act.
That's interesting. I didn't realize that the act, not the act, but the 17th Amendment was in the same year as the Federal Reserve Act and income tax and the IRS, isn't it?
Yeah. Other than that, it was a great year. So the upshot is, out of this, understand what money is. Basically cash, coin, and digits in checking accounts. Not savings, not anything else. Just our checking accounts. People hold money. Banks don't. Government doesn't. Fed doesn't. And I'll explain why. This is our system. It was taken from us. We have to reclaim it. Go ahead.
Yeah, I think, don't they also include these days like money market funds where you can quickly turn it into M1, or is it part of M2?
It's M2.
All right. Okay.
For example, I'll jump into it.
Yeah.
You can access your bank accounts electronically over the computer, and you have a checking account and a savings account. And on any given day, you can just go to your savings account electronically on the computer and move digits from the savings account into your checking account instantly. Never had a problem. By definition, savings accounts are not M1 because ultimately they are not considered spendable on demand now. That's why what's in M1 is M1 because it is considered spendable on demand now.
Good. Okay, let's go on to Module 5.
Yeah. Okay. Module 5. What isn't M1 money today in the USA? I love this quote. It just says it all. There are two ways to conquer and enslave a nation. One is by the sword. the other by debt. John Adams. Think about when he lived, what he did, and now what he's saying. He was there for the Revolutionary War. He was there to sign the Declaration of Independence. He was there for the Constitution. He became the second president. I'm not real happy with him because he was a federalist and very much about more and more centralizing power at the federal level. But this is a guy who'd been there, done it. And he's telling you, you can be conquered by the sword, which usually doesn't take long, or you can be conquered by what's happening to all of us today. We're being conquered by debt.
Yeah, that's well put there. And it's interesting because John Adams and Thomas Jefferson, they died on July 4th, 1826.
26, right.
Same day.
Now, what's interesting is that in the beginning they were friends. They became very unfriendly with each other. But ultimately, before they passed, they reconciled. And yes, it's interesting, odd, what a coinky-dinky that these two founders, not only did they die on the same day, God rest their soul, but they died on the 50th year of the Declaration of Independence. Mm. And I don't remember who passed first, but the one who passed second, it may have been John Adams, didn't know that his friend Thomas Jefferson had already died and thought that Jefferson had outlived him. So it's just an amazing story. To M1, or to what isn't M1. What isn't in M1 is all the cash and coin held by banks and the federal government and the Fed, which we talked about. Savings accounts, money market, everything else. That's an M2. And we're going to get to how M1 is created. But to give an explanation about this, are you familiar? You know, I am, but I don't know if it played over in the UK. Are you familiar with the TV show Star Trek: The Next Generation?
Yeah, I am, but my wife is probably more familiar.
Okay.
But it is, for the UK viewers, it is familiar.
Okay, good. Well, then you'll know this. Captain Picard would stand in his ready room, and he would go up to the replicator. And for those listening who don't know what a replicator is, it looks like a microwave oven built into a wall with no door. And he'd go up to it and he'd say, "Computer, tea, Earl Grey, hot." And then, there you get it. The cup, the saucer, the tea bag, the tea, heated to perfection. And he'd sip it. Well, if you have a replicator and you can program it to create any food or beverage item, do you need a kitchen? A refrigerator, freezer, stove, oven, microwave? You don't even need a dishwasher, because you put all the junk back in and say, take it, and the replicator takes it back to energy. That's one great appliance. We just don't happen to have it. The reason I bring this up is because the Fed, I've already said the Fed has no money. When I say the Fed, I mean the 12 banks of the Federal Reserve System. They have no money. They also have no reserves either.
And they're not federal either.
They ain't federal, and we'll get to why they are so private. So somebody's going to say, well, Alan, wait a minute. This entity has no money and no reserves. How can it operate? Well, it's got a replicator. Nowadays, it's fingertips on a keyboard, hit enter. The Fed creates all the reserves it needs to transact any business it has to do. It acquires all assets. It satisfies all expenses by doing one thing and one thing only, creating reserves. Let me give you an example. And this is coming from your good friend, Ben Bernanke.
My good friend.
Sorry, I had to. In 2012, Dr. Beebe is chairman of the Board of Governors of the Federal Reserve System. He gives 4 one-hour lectures to students at the George Washington University School of Business. Now, I found this was in March of 2012. It's June 2012 when I find out about this. I get the videos. I also find out that there's transcripts of what he said. This is fantastic. So I print those out, and I'm thinking, great, I don't have to take notes while he's talking. I can just highlight and come back. I will admit that prior to queuing up the first hour, I was really nervous. I thought, okay, this is Ben Bernanke, chairman of the board. This guy is going to hand me my hat. I'm going to have to shut up, walk away, stop talking to my friends about this because this guy is going to explain to me the world. In the first few minutes of what he started to say in the module in the first hour, I knew was not correct. It was spun a bit. So I dig in. After the first hour, I decide I'm going to just read the rest of the transcripts because I can't stand listening to them. Let's jump to the fourth hour. And in the this section is about him talking about what the Fed did post-2008 to help the U.S. economy. And I'm reading it, and he says that the Fed went out into the marketplace because the Fed does not deal directly with the U.S. government. It has to deal with banks, broker-dealers, whatever. It goes out into the marketplace. And he said the Fed went out and acquired $2 trillion worth of U.S. Treasuries, real-life interest-bearing debt obligations of the U.S. government. $2 trillion. We already talked about what $1 trillion is. And I'm reading. Then he said, and I'm reading the magic words. You're probably wondering how we paid for it. I'm about to go nuts. What he described was basically a journal entry, at least half of it. He said the way the Fed pays, and I put that word in quotes, the way the Fed pays for, or it paid for $2 trillion worth of treasuries, is it increased the reserve account of the bank it acquired the treasuries for. The offsetting debit goes to the asset U.S. Treasuries. Hit enter, we're done. The Fed acquired $2 trillion worth of treasuries by posting journal entries into its general ledger accounting system. How's that?
So the reserves went to like the primary dealers who they bought the treasuries from, or?
Exactly, yeah. They just, I mean, think about it. You can get any asset.
But the Fed has no reserves, does it? It just buys the asset through putting an entry.
I use the term because to me, when you and I go to the store, we buy stuff and we pay for things. When the Fed acquires assets and satisfies expenses, it doesn't pay for anything. It doesn't buy anything. It acquires, it satisfies. We buy because we're financially diminished. But think about that. You have the power to get anything you want by simply posting a journal entry into your accounting system. That's pretty nice, isn't it?
Yeah, I think it was Jim Sinclair. I don't know if you heard of him. He's a gold guy, and his family name really from his father's side is Seligman. And they were like they helped finance the Civil War, the Union, and they were like part of the big banking families on Wall Street, also involved in creating the Federal Reserve, I would say. And he says the Fed is like God. So it's like this replicator. They're the only one who can have it.
The thing is, again, when the whole piece is not looked at and somebody looks at just one little piece, they misinterpret, misunderstand, or misexplain the entire piece. The Fed is amazing because it was given the power to create reserves. Back in the day, it was pencil and paper. Now it's fingertips on a keyboard. But it's still, that's what it's doing. It's just creating reserves. To the point, you as an individual, I as an individual, we all have at least one bank account. If we have a business, the business may have at least one bank account. Now, the Fed is supposedly, allegedly, the big dog in this monetary system. There is a manual out there called the Financial Accounting Manual. I found it. It is the accounting manual of the Federal Reserve System. In it is a very long, lengthy, extensive chart of accounts. Chart of accounts is a listing of all the accounts in its general ledger. Okay? This is all basic, just bookkeeping stuff. Now, if I look at your business, you're going to have possibly cash on hand, bank account, accounts receivable, whatever. Same with my business. No Fed bank, not one of the 12, has even one bank account in its own name. Doesn't have one because it doesn't need one. It doesn't need one because it would never use one. In fact, the first account in the chart of accounts is called gold certificates, which is a receivable. The cash and coin that the Fed holds is not even considered in bank. It is the most unusual financial creature we have in our world. And we've allowed this system to take the power to create and extinguish money from the people when it absolutely righteously belongs to the people. Now, the interesting thing is, excuse me one second. The interesting thing is the way I found the Financial Accounting Manual. You've heard of, I call them Dr. Paul and Dr. Paul, Ron Paul, Rand Paul. They're Ron Paul, retired congressman, Rand Paul, current senator. And they're really, really big. I would so want to talk with them.
I interviewed Ron Paul a few months ago.
Oh, you lucky guy. Send him my name. They want to, quote unquote, audit the Fed. Now, this stuff is not in the modules, but I'll talk about it anyway. Now, to an accountant like me, an audit means something specific. Usually it means auditing the financial statements of a business, which is a very extensive investigation, review, analysis of what happened, all for the purpose of expressing an opinion about the fairness of the financial statements. So they're always talking about auditing the Fed. And they want to see the books. Well, I can tell you, you can go on the web and you can find any bank's audited financial statements today. I found, and I looked at like 5 years worth for each bank. And these financials are audited by one of the big top national, international firms in our country. And they render an independent auditor's statement. So when they say they want to audit the Fed, I don't know what they're talking about. But by reading the financials, that's how I found out about the Financial Accounting Manual.
So so you're saying that each Federal Reserve Bank, regional bank, they do have audits and they're public?
Yeah. The financial the last time I looked, just for the grins, I looked at and pulled up New York, Federal Reserve Bank, New York, their audited financial statement for 2018.
Yeah, and the thing is, you look at the is it H4B accounts where you get the assets in the Federal Reserve. They update it every week. And if you look at it carefully, if you scroll down, you see that all the assets the Fed holds, which is around 7 trillion now, they're not held centrally. It's each of the 12 banks that hold a little bit. And New York, of course, being the I think they're the head of the snake. They're the big Hydra.
The Federal Reserve Bank is, and we'll get to some more of this, but the Federal Reserve Bank, it was the first Federal Reserve Bank.
They're New York, yeah?
Yeah, New York. The Federal Reserve Act of 1913 was signed into law by Woodrow Wilson Mahy-Rott, December 23rd, 1913. The Federal Reserve Bank of New York went operational November 1914. It incorporated, I believe, May of 1914, had its first board of directors meeting in October 1914. But it's the big daddy of all of them because the open market desk is at the New York Bank. That's the group that does all the buying and selling of treasuries for the whole system. It's number one. It has the most assets. It was the first into existence. And, excuse me, it's the closest to Wall Street. I actually took a walk one day. I've only been to New York once. I got to Wall Street. I petted the bull on the head, and I started looking for the Fed. And I was pointed in the direction. There was I think it was a weekend, so there's nothing really going on. And I'm walking, and I see the Federal Reserve Bank. It's on its own block. But there was a moment of, I'll say, sadness for me. I'm walking, think about it, I'm walking literally from Wall Street to the Federal Reserve Bank of New York. This is the epicenter of the monetary system of this country, right? And there on the sidewalk is a young couple sleeping under a blanket. And I didn't disturb them. I was sad for them. And I'm thinking, the irony here is just incredible. These two are sleeping on a sidewalk at the epicenter of the monetary system of the United States of America. Something's really wrong here. So I go and again, this is a weekend, it's very quiet. I walk the perimeter of the Fed Bank. It's got two long sides, two narrow sides. Two narrow sides, no doors. The one long side, it has these huge, what would appear to be wooden doors. Wood with, steel embedded in them. Just that one thing. There's no handles on the outside.
Yeah, it's a lot like the Bank of England. It occupies a block as well. And one side is just the wall, is like a fortress. And it's got these big doors. I think that, like you said, you can only open it from the inside.
Right. And in front of the doors are some concrete pillars, so I guess you can't run at it really well with a truck. Then you go to the other long side, and that's the only entrance to the entire building that I know of. Do you think it was guarded on a weekend? Oh yeah. And then on the right side of it were I'll call them bays, where armored trucks would come and go. But there was only one way in, and it was armed guards. This is a serious building. So we talked about what is and isn't M1 money.
I remembered what I wanted to
Yay!
ask you. You were talking about Ron Paul and Rand Paul. Mm-hmm. So how come, they want to audit the Fed if the audit is out there for all the 12 regional banks? That's all you need. What are they talking about? Do you have any idea? Or
I can guess. This is why I would absolutely love to have a chat with them. One of them, both of them, absolutely. I believe their heart and their mind and their soul is in a really good place. I'm not questioning that. But the use of the term doesn't make sense. I do believe that when they use that term, they may be talking about they want to audit, review, examine what the Board of Governors is doing. Those minutes, those meetings, as opposed to the financial statements.
Okay.
However, when you look at the financial statements of any Fed bank, other than the numbers changing, you're going to get the same picture. No cash on hand, no petty cash, no bank account, none. As I said, the first asset is gold certificates, which is considered a receivable. Well, that just right there makes this entity really strange. Has no bank account in its own name. So then the question comes, well, it has a bunch of, and we'll get to this. Actually, I'll save this when we get to creation. Yeah, let's move to module 6, which is who creates M1 today in the USA and how. And this will kind of explain it. Using, again, I just use the term cash. You can call it Federal Reserve note, whatever. In my hand, a Federal Reserve note, cash, it's part of the M1 money supply. Now, but it's not always there. It's not always in that position. For example, let's say you and I are lumberjack buddies from long way back, and you come over and I got a couple of trees on the ground and say, hey, take a look at that. What do you think of that furniture? You're thinking, Alan, did one of those trees hit you on the way down? Those are dead trees. There's not furniture. Well, one day it will be furniture. Yeah, well, that ain't today. That's the same thing with the Federal Reserve note. Let me take you through the process. It's printed by the Bureau of Engraving and Printing. I've seen animation videos where they show the streaming bills coming off the rollers, and a sign right next to it says U.S. Mint. I'm thinking, the mint's for coins. The bills, the cash, they're printed by the they're printed by the Bureau of Engraving and Printing, the Bureau.
That's a government.
It's part of the U.S. Treasury.
All right.
Exactly.
So it's not the Fed that does it. A lot of people think the Fed prints the Federal Reserve notes, but it isn't.
No, it is a part of the U.S. Treasury. Now, what's interesting is that the entity in the Fed that orders the printing is called the Cash Products Office. So the CPO calls up the Bureau and says, we need this. And it gets printed up. Gets cut, examined, everything. It's put on the loading docks waiting for a Fed armored truck. Okay, fine. In the hands of the Bureau, they may have millions and millions of street value dollars on their loading dock. What is it to the Bureau? It's a print job.
Yeah, they're printers, yeah.
It's just a print job. And back in early 2000s, it was 6.4 cents a note regardless of denomination. Now, each denomination has its own cost. Let's say for this conversation, round numbers, 10 cents a note. It's just a print job. That's it. Fed armored trucks come pick it up. Take it back to the Fed.
The regional banks.
Pardon?
to each regional bank, right?
Well, they take it to a central and then they spread it out.
Oh, I see.
So it goes back to the Fed. And in the Fed, now, I've seen video of this.
Would this be the Fed in Washington, D.C., right?
Well, there's no Fed bank in D.C. Just the board of governors.
So it goes to each regional bank, the cash, and then
because depending on which bureau is making it.
All right.
Or printing it, I should say. So it gets to a Fed bank. And in the Fed bank, I've seen video. Their vaults are massive. And you have all this electronic capability. You have people with serious firepower. This is heavy, heavy security. They're not messing around. Sitting in the vault of a Fed could be billions and billions of street value dollars. I call it street value because if it was on the street, that would be their value. What is it to the Fed? It's a printing expense. It's an average, ordinary, regular, normal business expense like repair and maintenance, postage, office supplies. That's all it is. It doesn't show up. They have billions and billions of street value dollars in their vault. It does not show up as an asset. It's just a printing expense to be expensed. Pretty neat, huh? Next stop. I'm the Fed, and you're a bank, and you want some Federal Reserve notes. I said, fine, no problem. Give me your order. I send it to you. In your hand, in your vault, in your teller drawers, what is it? Is it money? No. It's reserves in physical form. Because for you to get that from me, I reduce your reserve account at my bank. So all the money, all the cash and the coin that you hold is reserves in physical form. Reserves and money are not the same thing. They're different.
So if JP Morgan gets $1 billion in cash from the New York Fed, the New York Fed will debit JP Morgan's reserve account at the New York Fed.
Bingo. I'll add something else. There, again, you see
for
this
Jamie Dimon's bonus, yeah. 1 billion.
I'm feeling bad for the guy. By looking at the balance sheet of a Fed bank, by looking at the financial accounting manual and being able to see the chart of accounts, what I learn is there's an account called Federal Reserve Notes Outstanding, and it's a liability account. People understand this to be, oh, look at all the Fed owes. No, it's wrong. You have to understand how this account is affected to understand what it means. For example, as you just said correctly, the JP is going to get $1 billion in cash, maybe some coin, out of the Fed. The debit entry that reduces their reserve account, that's where the debit goes. And as we know in basic bookkeeping, all accounting, you have to have at least one debit, one credit, and all the debits have to equal all the credits. So where's the credit go? Because this is not an asset anywhere on the books of the Fed, the credit goes to this account called Federal Reserve Notes Outstanding. It's simply a swap account. Now, we won't get into the bookkeeping of this, but the way that account gets reduced is a bank sends back Federal Reserve notes. The account goes down, the reserve account goes up. So it's not a true liability. People have to understand the Fed is like no financial creature out there. It's not. And everything they do is done in bookkeeping. Finally, you decide to come to the Bank of Allen. and you want to draw out some money. You come to the teller, and you get or maybe you go to the ATM, whatever, and you get 100. That 100 in your hands is now part of the M1 money supply, M1 CA, M1 cash. But to get that, given that you drew it out of your own checking account, your M1 ED goes down. Your personal total money supply has not changed. It's just changed. The supply is the same amount.
Location.
It's just form. It's just gone from electronic digits to cash. Only in the hands, as we talked about before, only in the hands of people does Federal Reserve notes and coin become money. If someone else holds it, it's not money. I was going to read this quote since we're here.
So how does just a second, how does it impact Bank of Allen's accounts when you take the cash out?
What happens is you come to me, and what I'm going to do is I'm going to hand you over 100. The debit goes to your checking account, which reduces that liability, and I'm going to hand over 100. So my reserve account, my reserve balance on hand has just dropped 100.
So that's the other thing that is interesting now with all the talk of cashless society, isn't it? Reserves would stay in the banking system, wouldn't it? If you can't take the cash out.
The problem for me with full electronic, and we talked about this, the full electronic digital account banking, and we got a module on that coming up. This is terrible. There's no positive.
Yeah, I interrupted you earlier. I think you wanted to make a note.
Oh yeah, thank you. There's a quote on Module 6, and I actually added to it, but I'll read what it says there. This comes from Henry Kissinger around 1995. Who controls the money controls the world. Well, he also said this: control oil and you control nations. Control food and you control the people. For me, I added, control the monetary system and you will control oil and the food. Either way, this speaks volumes as to when whomever controls the money, the supply, the creation, the extinguishment, the monetary system of a country, you own the country. And we can see financially what the U.S. is looking like today. $26+ trillion in national debt, a couple $100 trillion in unfunded liabilities, a constantly growing federal government that cannot be funded by taxes, and a system that's going to eventually run out of lenders. Other than that, what could be wrong?
You want to go to Module 7 now, or we're still in 6?
Yeah.
7.
Okay. This is about, again, people get all crazy about Federal Reserve notes. Understand, it's a piece of paper. And when I say paper, I don't mean wood pulp paper. I mean 75% cotton, 25% linen. That's it. Allegedly what makes it special is it says that it's legal tender for all debts, public and private. Okay. But if you go, and you can see that section, what does legal tender mean? You go to the Treasury Department and you find out there is no federal statute mandating that a private business or a person or organization must accept currency or coin as payment for goods and services.
So why do they do it then?
Well,
so you think they've put that on that note, but it's not really, it's not legal tender then, or it's only like by consent, right?
Right. The thing, you know, there's that saying, if you tell a lie long enough, it gets believed. Well, if you tell everybody this is legal tender and you don't explain what legal tender means to you, you let them think what it means and everybody's okay. In my area, you might go to a little convenience store, and these are the kind of stores that are open past midnight, or they used to be. And somewhere around 9 or 10, especially on a weekend, there might be a sign, you know, they won't take anything bigger than a 20. If legal tender really meant what people think it meant, they couldn't do that. Could not do that. Also in this module, we talk about the, you know, we've already covered it, the printing, it's a liability. Ultimately, the Federal Reserve notes belong to the Fed because they're the ones that had to deal with the cost of printing. And when a bank gets, let's say, a Federal Reserve note that just, you know, kind of torn, tattered, what do? They send it back to the Fed. The bank's reserve account goes up, and what does the Fed do with it? They shred it, they burn it, they bury it. Why? Because okay, this is a $100 bill. Why are you're just destroying a $100 bill? Well, to us, it's 10 cents. It's already been expensed. We don't care. It has no more value to the Fed than a box of rubber bands or paper clips. It's just was an operating expense. That's what it gets the job done because people accept it. But the problem is not that it's paper, 75% cotton, 25% linen. It's not a problem because it isn't gold. The problem is the monetary system that basically helped create this. That's the problem.
It's unbelievable the amount of power these people have.
I'm glad you brought that up. Again, I get real picky in this study with words and terms because too often they're just misused. The term is print money, print it out of thin air, whatever. Well, as I have explained, M1 money comes into existence as an electronic digit in a checking account. Or maybe I haven't, but anyway. This all happens in bookkeeping. What else comes out of bookkeeping? Ultimately, balance sheets and income statements. Has anybody ever said, because I've never heard it in my business, I've never heard anybody say that balance sheets and income statements are printed out of thin air. No, they're not.
You have to earn it.
Well, they're printed out of the bookkeeping system, the general ledger. That's the same place money comes from. It's not thin air in that it's not an active magician, because when the conversation stops there, no one gets into the detail like we're talking about today. And we have to get into the detail to understand what we, the people, have to take back from the banks and not get lost in the rhetoric or misunderstand how the system actually works. Does that make sense?
All they're doing then is not printing money, but they're just creating bookkeeping entries
Yep.
and getting powerful from it.
I agree with that. I'm going to add one more thing to it. Okay, if I were, I'm a young guy and I'm working out a lot and I'm eating good and I'm sleeping and I'm getting strong, right? I'm getting powerful. Okay, fine, good. I'm not negatively impacting anybody else unless I use that power in a bad way. The banks are incredibly mind-blowing and powerful. The problem is they're using it in a very bad way. And ultimately, as we discussed in the beginning, this power to create money, the concept of money, I can't hammer it home enough. This belongs to the people. We have been lied to, cheated on, and stolen from. And it's time we say no more. We got to get it back. And that's part of the reason for all of this education, is that to me, it's relatively simple, straightforward. And once people understand it, they figure out, let's get this done. Because we can have a national economy without inflation, taxation, at least at the federal level, and debt, national debt. Shall we move on?
Sure. Module 8.
Okay. I'll read the quote.
Yeah.
And I sincerely believe with you that banking establishments are more dangerous than standing armies, and that the principle of spending money to be paid by posterity, the future, under the name of funding is but swindling futurity on a large scale. Thomas Jefferson, in an 1816 letter to John Taylor. What's great is that these people back then, they wrote letters, and they've been kept. Jefferson talks about posterity, meaning the future, and how dangerous banking establishments are. He may not have fully understood this, but he nailed it with that. This one, I think we've actually covered a bit, because the thing about, I'll talk about reserves, because we've already talked about M1 money, and coin basically kind of comes into the same way. Reserves are basically the currency of banks and government. Excuse me. That's what they use. It can be physical, it can be electronic. A person will, in our system, will never hold, have, use, or spend $1 of reserve. And by their definition, banks and governments and the federal government will never have, hold, or use $1 of money. Electronic digit here, electronic digit there, same. The physical money, the same. It just depends on who holds it. And again, this is something that is not talked about much. This is going to be fun. Module 9.
Okay. Module 9.
I like this. Okay. And the quote comes from a circuit court case. The regional Federal Reserve banks are not government agencies, but are independent, privately owned, and locally controlled corporations. Many people have said, "Oh, it's quasi-public, or kind of public," and somehow,
or a hybrid, they call it.
Yeah. And the thing is,
that was in a court case, Ninth Circuit. Court. Yeah,
yeah.
United States.
Yeah. As I say in the module, is the Fed public or private? Short answer is private. Now, to prove it, the thing about this system is it's comprised of 12, and you've used the word correctly, regional, independent, privately owned, run-for-profit banking corporations. Doesn't sound public to me. Each one of these banks has been incorporated. So now I'll continue. Each bank has a president, a vice president, board of governors, employees. We got a president in the United States, but there's only one. So this doesn't sound public to me. Each bank, each Federal Reserve Bank issues shares or stock. Okay.
Owned by the commercial banks, the private banks in that district, right?
Only the banks, only the member banks within the region can be stockholders. Now that stock is not traded, excuse me, on any, not traded on Wall Street, NASDAQ, nowhere. It's not publicly traded. But it does show that the banks within the region have an ownership stake in the Fed bank. That makes it very private. Let's see what else. It's easier to read it here. We have in this country what are called Freedom of Information Act requests, also called FOIA, F-O-I-A. The Fed routinely refuses FOIA requests. You can't do that if you're public. The bank, allegedly, to audit the Fed requires congressional authorization. Well, if you're public, why would you need congressional authority? It would just be done. The Fed, each Fed bank actually is responsible for state property tax. I don't know of any public entity that pays state property tax. Here's the two that are really interesting, and that is, and this, again, this came from reading the Federal Reserve Act of 1913, page 8, section 7. This is where I learned that the Fed has stockholders. This is where I learned that the stockholders at that time were entitled to a 6% dividend annually based on their capital invested. That sounds pretty private to me. I've never known a city to give a dividend to the citizens of the city. Then there's the kicker that really surprised me.
And I just have one question about
of
that.
Course, of course.
Because I've read before somewhere, I don't know where, that the Fed supposedly pays back all its profits to the U.S. Treasury. Is that true, or is that doesn't account for that 6%?
That's where we're getting.
Oh, okay.
Good timing on the question. In the Federal Reserve Act, it states that after taking into account its expenses, and I'm kind of paraphrasing it all, and this is based on looking at the income statement for 12 banks for 5 years. They were all the same. You get to a number on each Fed bank. It's called consolidated net income before distribution. Let's say it's 100. The first one is dividend to stockholders. Let's say that's 1. Then there's a set-aside amount. Call that 2. That'll be 2. What remains is 97. That is sent to the U.S. Treasury. That, of course, is a transfer to the U.S. Treasury as electronic digits. However, the kicker is, what did they call this net amount that gets transferred to the U.S. Treasury? It's right there, Federal Reserve Act, 1913, page 8, section 7. It's a franchise tax. Franchise tax is paid by private corporations to governments for the privilege of doing business. Now, how public is the Fed? It's not. Finally, I'm looking through the notes to the financial statements, probably of New York, and I come upon an area where it's talking about retirement systems. Now, if you're a public employee, because you're working for a public entity, Well, you're going to be part of a public retirement system, correct?
CalPERS for California, right?
Yeah, that's one of them. CalPERS, CalSTRS. Yeah, they're running short. Anyway, what you find out in reading the notes is that there is a retirement system, a multi-employer retirement system. It covers the 12 banks, it covers the board of governors, and one other employer. That employer is the plan administrator itself. Their retirement is so private that the entity running the plan is a member of the plan. The Fed is absolutely, totally locked down, private. And it's owned. Now, think about this. The Fed is supposed to be the regulator, right? Right. And the banks are to be the regulatees, those to be regulated. Yet who owns the regulator? The regulatees. Who's in charge? The entities. The regulatees are in charge of the regulator.
It's just a sham, and they're not really regulating anything.
Not to any great disapproval of the owners. Now in the U.S., if you're a private corporation, you are primarily held responsible to keeping the shareholders happy. And if they're not happy, they're going to sue you. Who are the stockholders, shareholders in each one of the Fed banks? The member banks within the region. Who's the sole creator of money in our system? The banks. Who's really in control? The Fed or the banks? I'll say the banks.
Yeah. Fed is just a front, I guess, so people don't realize that it's like JP Morgan or Wells Fargo doing all the
I would definitely say the Fed is kind of the straw person. It's out there, it's up front. This is where the focus is, because we want you to look at this. Because if you do, you won't see what's really happening in the system. And so so to me, the Fed is absolutely, totally private. And there's calling it anything other than private is ridiculous. Calling it quasi-public, to me, is like saying a woman is quasi-pregnant. No. You're one or the other. There's no in between.
Module 10?
Yeah.
Okay.
Great. This one, I actually even gave a speech on this. The quote is, usually all the quotes come from somebody famous. This one is mine, so, bear with me. The first part, a plan A without a plan B is not much of a plan at all. That's me. The second part, 2 is 1, 1 is none. That comes from the United States Navy SEAL team. To me, what they're saying is, if you got 2, you're okay. If you only got one option, this is going to look ugly because you don't know what's going to happen. And, well, this is my problem with cashless monetary systems. We've touched on it a bit. If all the money in the system is electronic, it's a digit somewhere in some bank's computer system. Number one, do you have direct access or control over that computer? No. Can you be shut out? Oh, yeah. And what do you need to be able to have access other than not getting shut out? You need a computer access, internet, electricity. One of those 4 goes away, it ain't happening. And it also means that if all money is electronic, you can't store any of your monetary wealth. We have real estate wealth, car wealth, books and TVs, but monetary wealth, you can't store it anywhere. It's all in the system, which means you're totally dependent on the system operating. I don't like that.
Yeah, it's just one option instead of two, like that.
That's exactly. There's a couple countries that are pushing really, really heavy to go in full cashless. They're in Scandinavia. I think the lead is Sweden. I've seen pictures, and if I'm to believe the interpretation, the sign says no cash. Okay, guys, you're making yourself totally dependent on a system that you only have limited access to. One example, in the US, we have a thing called Social Security. Well, Social Security has a bad habit. Maybe it's fixed it, but when I wrote this, had a bad habit. It would declare approximately 1,000 people dead, let's say a month. They weren't dead. Well, once the word goes out that you're dead, you think you can access your bank account? No. Think you can get credit? No, because you're dead. And how many months do you think you have to go to a Social Security office and yell and scream to convince them you're not dead? But until they believe you're not dead, you're dead, and you cannot access your electronic monetary wealth. This is dependency. The other story I like is that, have you ever heard of the Carrington event?
I think so, yeah.
Okay. The Carrington event happened in the 1850s. This had a big effect on the world. What happened is the sun decided to kick a little energy. Well, it kicked a lot of energy. Massive amount, and it hit the earth. The only reason people visually would have known that this happened is that the aurora borealis actually came down into the tropics. But nobody got hurt or anything. The other way people knew that something was up, all the telegraphs got fried. They caught on fire. Non-operational. Project to today, God forbid, we have another Carrington event. Is any electrical grid working? Is any computer serviceable, fixable? No, it's all fried. Will your cars work? Probably not, because all the electronic gear is gone. Your refrigerator, everything electronic is gone. It's not like, oh, my hard drive crashed, I'll just take it down to the computer shop and they'll give me a new hard drive. No, it's all gone. Which means if all your monetary wealth is in the bank, is in a computer owned, held, controlled by anybody, including yourself, literally, it's toast. You've got nothing. So when you don't have two, you practically have none. A cashless society, and people will sell it. Oh, this is great. We want to have all this outlay for bills and coins. It's clean. It's neat. It's hip. It's happening. It's techie. I flash a card. Great.
And they forget, though, that the other thing as well about the cards is that they're issued the banks always get a cut of every transaction because they issue the shops. Like I ran a small business in the UK, and I had one of these card machines, and I had to pay rent to the bank, Barclays Bank, every month. And every transaction people did with cards, Barclays got a cut.
Yeah.
So
little sum for the effort. Yeah. Why not? Because you're going to take the cards because you have to take the cards or you're going to lose the business. And since I've got you over the barrel, I might as well take a little more. Yeah.
Oh,
And
yeah,
again,
you can bet the fees are going to go up.
Yeah. And the thing is that most people have never heard of the Carrington event. So they don't even begin to imagine having this event destroy our world.
Or nowadays, it could be a foreign country using some kind of weapon, electromagnetic.
It might interrupt something, but I don't know if it would interrupt it's not like coming from the sun.
Yeah.
Where this is just a massive pulse. The thing is, I don't have the dates and times in my head right now, but there was another one not that long ago in that it crossed our orbit path. There was just a 9-day separation. 9 days away from all hell breaking loose. Can it happen again? Most likely it can. If you are a cashless monetary system that only has money in computers, you're completely dependent and your systems will eventually fail. And if they don't fail and you piss somebody off who you maybe should not have, but they got the power or the clout, you just got locked out of your system.
Yeah, it's like, have you seen Enemy of the State as well?
Yeah.
When Will Smith, the character, I forgot his name, they cut him off, like his cards don't work, anything.
Yeah. This is the problem, whether it's UK or US. The power originally, at least in the US, was designed to be held by the people. And we have representatives to go to DC to represent our interests, to keep the government limited, small, not ever expanding. I wish I had a time machine. I am absolutely serious. I'd like to go back, grab a bunch of founders, bring them back, and say, what do you think? They would be so appalled. The federal government in the US was meant to do a very few things. One was to look out, protect and defend the US from the rest of the world. Two, deal with the squabbles between the states. Basically be a mediator. That's it. That's it. We've gone way beyond our constitutional bounds. Mario, this has been so fun for me. I really appreciate the opportunity to be on your channel, to be in another country, to have the back and forth. I can't believe this has been 2 hours. It's been amazing. I look forward to being back with you in a couple of weeks, and we'll go through the rest of the modules. And the next one, just in case people want to know, this is going to be what is a Ponzi scheme, one of my favorite topics. But we'll get to it. And ultimately what we're going to be getting to is where the problem really lies, which is, of course, money creation, money extinguishment. Now, most people don't talk in terms of money extinguishment, but it's very important to understand that if money comes into existence, and it only comes into existence through bookkeeping, it can go away. It can be extinguished. It can be taken out of the supply. And that's what banks do. They create money, they extinguish money. And when we get into Module 16 and the bookkeeping, you're going to be able to understand what the power the banks have, what the power that was given to them, taken from the people, and what needs to be returned to the people, to our benefit. How it actually happens, in what form or shape, I'm always open for discussions with you, Mario, on this. But the thing is, when people start talking about a new monetary system, new money, do this, do that, I come back to my basics. What does money do? Facilitates the exchange. If it gets it done, it's money. I'm happy. 2, does the creation extinguishment process create or not create inflation, the need for taxation, and national debt borrowing? If we don't get rid of those 3, I don't care what's being proposed. And because whether it's the UK or the US, US, at least a lot of people I know, we're very independent. That doesn't mean I want to trample all over you. No, I don't. I just don't want to be trampled on. I want my liberty, freedom, and rights. But there's some things that we have agreed as a society, we're going to give up some of that freedom, that absolute choice, so we can interact with each other. For example, traffic. We got traffic lights, we got speed limits, we got directions. Why you guys drive on the wrong side of the road, I'll never know.
Yeah.
Anyway, the thing is that we've all come to agree. You stop here, you yield here, you go here, because we all have to interact to make it a safer place. That's something, you know, back in the horse and buggy day, you didn't have any of this. Well, when it comes to monetary systems, for me, and this is what we'll get to next time, we need a national monetary system because it has to function for the benefit of the nation, not just individuals. That needs to be brought into context, and we need to be able to fund our federal government without it having the need or ability to tax or borrow. And we can do that. And the people have a way of controlling the supply, so there is no inflation. It stays in harmony, in sync with the economic level. You deal with those 3 things, you got the monetary system you want. And since we've seen what a bank-controlled monetary system has done to us and to UK, are you happy with your system?
Well, we've got the same system. We got the granddaddy, actually, you know, the Bank of England.
Right. And, okay, this doesn't work. And there's only one way to fix this. The people have to demand it and take charge. And what's interesting is that, I'll wrap with this, Ben Bernanke lit me up on reserves. I mean, when I read that, I was speechless. I go, oh my gosh. Well, I have some attitudes about the monetary system, about money. And some people may think I'm totally whack. Well, I got to tell you, I got one source to thank. That's the Bank of England. You have a group out of the Bank of England called, I don't know if you've heard of this, the Monetary Analysis Directorate. You ever heard of them?
No, I haven't.
Okay, yeah. Get the initials, MAD, MAD. Well, in the first quarter of 2014, 3 authors from MAD wrote an article, about 11, 12 pages, called Money Creation in the Modern Economy. Now, a friend sent this to me. I didn't find it. And I gobbled up the first page or 2, and then I went to the conclusion. And I'll tell you, okay, am I going to doubt the authority of the Monetary Analysis Directorate of the Bank of England? No. I'm going to believe everything they say. And they just verified what I know. The thing is that when the people hurting you tell you how they're going to hurt you, it's time to take note.
Yeah, you need to listen. They hide in plain sight.
Bingo. Absolutely. This is, again, what we're talking about, you know, and I know, the vast majority of people, if I walked out on the street, not that I could talk to them today, but if I could, and I'd ask them questions, basic questions, they have no idea. But I'll tell you what's, for me, sadder. They have no interest. I don't need to know this. I don't need to know this. I need to know sports scores. That's what I need to know. So, Mario, this has been an absolute blast for me. I really, really appreciate the opportunity to be on your channel.
Oh, and it was a pleasure having you, also, and an honor. You've done a lot of work on, I mean, I've done a lot of research on central banking, but the way you've looked at it is really interesting. I learned a lot, and thank you for being on the channel. And
oh, yeah.
Yeah, I'm looking forward to having you back in a couple of weeks or so.
That would be fantastic. I look forward to it.
Thanks.
So, till next time, may you be and stay safe and well.
You too. Thank you.
Thank you.